All right, good morning, everyone. Welcome to Global Business again. So, this is week two. Now, we've been learning about GDP in our last week. So, today we are going to learn about inflation and what causes the inflation, right? So, our learning intentions for today are what inflation is. Okay, we are going to look at what inflation is, and the success criteria would be that you can define and explain what inflation is, and you can discuss at least three reasons for inflation. Okay, so now start thinking in your mind, what do you think might happen if the cost of goods increases every year? And that does happen every year. Some of the prices of the goods increases. Have you noticed any products that you use increase in price? Okay, think of some of the products that are increasing in price, and let's keep going further. So you can pause here and think about a couple of products, and message me via Teams, right? Now, the key vocabulary is inflation, standard of living, capital, demand, and supply. Alright, I'm going to discuss all of them in the next few slides. So, I want you to write this key vocabulary as glossary words in your notebook as well and define them also. Okay? Alright, let's keep going. Now, this is, just going to put the screen a little bit down so you can see what's on the whole screen. Alright, so what is inflation? Now, normally inflation is the increase in cost of goods and services. So it is the rise in prices of the goods and services over a certain period of time. Okay, certain period of time means it could be any period of time, but usually it is measured on a yearly basis. Okay, we can measure it every quarter, half yearly, or annually, but normally the increase is measured on yearly basis, and it's been determined what is the inflation, what has been the inflation in this year. Okay, now rising prices means the consumer pay more for goods and services if they want to continue to consume the same amount and maintain their standard of living, right? Now this does mean that, for example, if the prices are rising, then you will need to spend more money to buy the same quantity of products, right? Now, if you don't have that amount of money, you'll be buying lesser quantity. Okay, again, it affects your standard of living also, right? Now, when we are talking about rising prices and the goods and services, when there is inflation, the wages and salaries of people also rise. Okay, we are going to discuss that in few more slides. Now, look at this example here. In 1980, look at this, 1980 and 2015. Now, money spent on goods and services. So, when you spend $100 on buying the goods and services for $100, the same amount of goods and services in 2015 would cost you $408.63, right? Now, again, when the prices are rising, the wages also increase, right? So people who are working, they get increments and all, and it's based on the inflation as well. So the average weekly wage in 1980 was $245.70, and the average weekly wage in 2015 was $1,674.80. Okay, so can you see the rise of the average inflation rate is 4.1%. Okay, now how does this work, right? Now again, the same thing. Example, $100 spent on goods and services in 1980 would cost $408 in 2015, assuming an average inflation rate of 4.1% over 35 years. Okay, so it must be remembered, however, that wages and salaries do increase as well. Okay, so if your wages and salaries are not increasing and inflation is just rising, everyone will be going into poverty. Okay, you won't have enough money to buy products, so increase the prices increase and your salary also increases. Okay, now let's look at the low inflation and high inflation. So low inflation was, again, we take the example of 1980 and 2015. So when you spend $100 to buy this amount of products, in 2015 you spend more money to buy the same amount of products. So that is inflation. rise in the prices of the goods and services over a period of time. Now, inflation is actually good for the economy if inflation is considered low, if it does not exceed 2 to 3% per year. Okay, so if it is not exceeding 2 to 3% per year, it is good sign that our country is going good, our economy is working properly. Okay, however, if the inflation is increasing from say 4%, 5%, 6%, or maybe 10%, then that means we need to do something for the inflation to stop. Okay, now who looks after the inflation? It is the Reserve Bank of Australia and Treasury. Reserve Bank of Australia is the bankers bank, right? So they look after the banks and the economy, and all the government transactions go through Reserve Bank of Australia. Okay, now what is a tax? Okay, tax is when a person or company have to pay a part of their income or profits to the government. Okay, again there are tax slabs. If you earn specific amount of income, you'll pay the tax on based on your income. Okay, and it is mandatory for everyone to pay taxes, because when you pay taxes, it goes to the government, and that helps build the infrastructure of the country. Okay, not only now with infrastructure, it does mean that your education, hospitals, rails, roadways, okay, this is all paid by the taxes that the residents or citizens of the country pay to the government. Okay, now why do prices of products increase? There are some reasons, and we're going to look at that now. So cause in rising prices, is stronger demand in the economy for goods and services. So when the demand of any product increases and the supply is not increasing at the same time, then the price of the goods will increase. All right, for example, we've got a very good example in this COVID-19 scenario. So if you remember, there was a time when people were hoarding lots of toilet paper and people were looking for sanitizers, right? There was so much demand in the economy, and the supply wasn't that good, right? The businesses were not able to meet the demand, right? So that's why there was shortage of goods and services, and that is the reason some of the toilet papers were sold at high prices, right? Even the sanitizers bottle, little tiny bottles, were sold for $5-6. Normally you will get them for $3.50. Okay, so this is how the prices of products increase. So if the demand is more and the supply is less, then there will be an increase in price to regulate that demand. Okay, then the price will increase. Obviously the demand will go down. People don't want to buy expensive items, and it will regulate the demand and supply. Okay, now let's look at some of the reasons for inflation. So there is demand pull inflation and cost pull inflation. Okay, now increased spending may be due to consumer confidence. So if people are feeling very confident, they've got enough income, they'll spend the money, right? They've got secure job, and they're earning enough money to pay all the bills and everything. If they've got spare money, they are going to spend the money. Okay, now businesses confidence, expand their business operations, employ more staff, and invest in better capital equipment. Okay, again, trading partners such as China performing well and demanding our exported goods and services. Okay, relatively low interest rates encouraging consumers and business to borrow more in order to spend. Okay, so if interest rates are low, we are going to borrow more loans, we are going to buy a house, we are going to start a business. Okay, that means this encourages consumers to borrow more, and that is going to help the economy also. Okay, again, government policies, lower taxes and increased government spending may also lead to increased demand and therefore expenditure. Okay, now how does cost pull inflation work? Again, wage increases. So when the wages are increased, the businesses may pay on this extra cost to consumers, so the prices of the goods will increase if the wages are increasing. Again, higher taxes and higher interest rates on money borrowed. So if there's again if there are higher taxes when we borrow loan, if we are looking at a business, when we are borrowing a loan, and if we are paying higher taxes, the cost is likely to be passed on to the consumers again. Okay, so that's why the price of the product may increase also. Okay, so these are some of the reasons for inflation. Now I want you to pause here and write down all these notes in your notebook as well. Okay, if you need to go back, look at the video again, you should be preparing all the notes in your notebook. Okay, I'm gonna keep going, so you can pause here and write these things down, and then play the video again. Okay, now what are the other reasons for inflation? Now I've divided them into internal causes and external causes. So internal causes means the things that are happening within our country in Australia. Okay, external causes means in the world of globalization, when countries are trading amongst each other, what is driving the inflation when we are looking at global business. Okay, now the internal causes of inflation are a large surge in property prices. So if the price of the property increases, it is going to give rise to inflation. Okay, higher wages and labor costs. So if the wages are increasing again, as we discussed earlier, so higher wages and labor costs is going to result in increase in prices of the goods and services. Boom in credit and money supply. Again, if we are borrowing loan, we are paying interest rates, so we are going to pass it on to the consumers again. Okay, if there is rise in business taxes, for example VAT, value added tax, then again, if you're paying more taxes, we want to earn the same amount of money, so we'll pass on that extra expense to our customers. Okay, now let's look at the external causes of inflation. Again, oil, increase in the prices of oil. Okay, the gas prices, it gives rise to the inflation in global commodity prices, depreciation of the exchange rate. So exchange rate is something, for example, Australian dollar converted into US dollar, okay, or Australian dollar converted into euro or something. Okay, so if the value is decreasing, that is that tells you that the inflation is rising. Okay, higher inflation in other countries. So if there is inflation in other countries from where we buy goods and services, then the costs are likely to be passed on to our customers again. Okay, now this is a case study on page number 482 of your book. Now in this case study, they're looking at the price of coffee, cappuccino from 2010 to 2014. In 2010, the price of a normal cappuccino cup was $3.15. However, in 2014, the price of that cup has rose to $3 and almost 80 cents. Right? So this is how we measure the inflation. So the prices have increased. There's been increase in prices over a period of time. This is an example for inflation. Okay, again, if you look at this example here, how inflation has changed the price of a cup of coffee over time. It doesn't look like it's from Australia, it might be some other country, but we'll look at the example. In 1970, the price of the cup of the coffee was 25 cents. Then again rose to 45 cents in 1980, 75 cents in 1990. See, the price is increasing over a period of time. This is inflation, right? Again, $1, $1.25, and again in 2019, $1.59. Okay. Now again, can you think of something you buy that has increased over the last few years? Think of some examples. One very good example is hand sanitizer. Okay. What else can you think of? Now this is a video that I want you to watch. Okay, when you watch this video, then you need to answer these questions. Why does inflation happen, and identify an example of inflation. This PowerPoint slide is uploaded on under your files. Okay, so go there, open the PowerPoint slide and play this video. Okay, once you do these questions, this is what you need to do. I've also uploaded them under your questions, and this is another question that's on your assignment as well. Have a good day, guys. I'll do another video for the next task. In the meantime, go through this and enjoy your time. Bye bye.